You. Today is Tuesday, 24th of February 2026. My name is Francisco Gaffney, and this is my daily streaming all about governance, risk, compliance, and advisory boards. So, yesterday we talked about moving from the funnel effort. And funnel effort, I mean actually when you have an organization that is doing efforts every quarter, every semester, every year, and it's start all over again, all over again. It's a feeling that actually it seems to actually never it's like kind of an endless story, if you may. And instead of having an ecosystem that pulls you, and I showed this graph yesterday, you see on the screen now, where this is the ecosystem. So where you have everything happen, and this is the reality of the businesses, everything happens at the same time. It's not linear, actually. You have an expert in this, an expert in the other, and actually they focus in certain things, but all the rest seems to be disaligned or disengaged with that expertise that you bring to the organization. But this ecosystem has a full view of absolutely everything that is happening in your organization at the same time, so you can know where you know this saying that say the wheel that make noise is the ones that get the oil. You can have this here very quickly, very fast. Now, um, as I mentioned yesterday, um, this is the ecosystem. But today I'm going to I convert that into something your board can govern, which is predictability. So yesterday we mentioned about all our brands, our people and partnership, which is a commercial acceleration on how you scale. And today we're going to talk about predictability, which is related to the things that which is your merger and acquisitions, your ecosystem in terms of partners, alliances, distributors, marketing agreements, how you make those revenue happening in terms of pricing too, and what are the assets that you have. And assets not necessarily are your physical or intangible things. Intellectual property is an asset, for example. I'll give you an example today. So this is how you grow and how you utilize your capital. So we're going to stay in this section of the wheel today. Now, from the asset lens, today is the financial assets. So as in this board level asset operation system, the first milestone is, or the milestone is in this three section is predictability. And there are three problems with this. And let's start to look into this now. Problem number one is UK CPI inflation was 3% in the 12 months to January 26 to last month. So even when headline inflation cools, it still compounds your input cost and wages expectations into the next planning cycle, because actually this is something that we are carrying over. Now, the Bank of England held a bank rate of 3.75% in February, so this month. That keeps pressure on refinancing assumptions, discount rates, and investor tolerance for financing plans in the next quarter, meaning Q2, Q3, Q4. Now, problem number three, the Financial Reporting Council going concern guidance is explicit that investors should be able to understand your solvency and liquidity risk. Investors should be able to understand, right? And how you reach your conclusions. So if you cannot explain how you reach your conclusions, so what do you expect the inspectors are going to say about investors? Are going to say about how to finance you? It could be the mainstream bank or private investors or whatever is the case. So weak runway logic is not a private worry that you have. It becomes a disclosure problem now. And you say, why? Well, anyway, so these are problems that you have to face now because the rules are changing and they are changing as we go along. And you have three factors you have to consider every single time. Economic factors like the ones that we mentioned now, technological factors like AI. It's a disruption of technology right now. It's happening and it's very ambiguous. And then the social factors, because go to hire somebody, and particularly some people will ask for, is this a flexi contract? Is it an office-based contract? Is this a full remote contract? And then you have countries that are promoting digital nomads. They're giving visas explicitly for people that are working remotely. Now, back to the finances. Imagine this, cash planning on last year assumptions is like driving with the Wednesday, with yesterday weather, forecast. Yeah, you will arrive eventually, but how? In the less risky scenario, you will probably arrive very late and very stressed because you are looking backwards instead of what's going on, and you don't have a view of what is the current weather, is the weather from last day or last week. So here's a board level shift. Stop treating margin and runway as accounting outputs. Treat them as a managed assets with owners, triggers, and decision rights. And this is in the section in the center, which is called revenue. So as a board advisor, what I would propose to consider in this case, number one, build a margin bridge that the board sees every month. So price, value, mix, cost, inflation, productivity, leakage, and then assign owners to each lever and set escalations triggers. Number two, tighten pricing execution with compliance in mind. So the UK competition and consumer rules allow pricing freedom, but require clarity. And here's the trick. Well, the trick. That is the law now. Digital Markets Competition and Consumers Act 2024 explicitly prohibits drip pricing. So the practical lesson is simple: clean pricing design, clean communications, and clean governance. And if you're wondering what is drip pricing, it's a deceptive sales tactic where businesses display a low headline price, then add mandatory fees such as services, booking, or baggage charges. You're familiar with the low-cost companies, actually very famous about these drip pricing methodologies. But guess what? Many other industries are using exactly the same thing: hospitality, leisure, retail, services. So go to Amazon, but sorry, I shouldn't mention anybody, but go to any retailer that does sell services or products online and look at the checkout. The price that you started to see happening at the beginning, when you reach to the checkout, it starts to increase by several points. So what happened there? Anyway, so suggestion number three, use stress test as a discipline, not as a slide, right? Stress test. So the Financial Reporting Council guidance points to company-specific analysis so investors can see how you navigate solvency and liquidity risk. Again, investors want to see how you do things. This is where the capital discipline stops being a slogan. So one useful research that we can anchor here is coming from Bain Consulting, that they found that the companies that are confident they can raise prices and hold them without losing many customers tend to have higher profit margins than companies that can't. It's not magic, really. It's an operational grip. And here's the key things to consider with these studies that they've done. So raise prices, hold them without losing many customers. So this is a trick. Well, a trick. I don't know if it's appropriate to say a trick, but this is a mechanic, the system, the methodology. Raise prices, hold them without losing the customers. And that's why we use this system that we have in front of the screen. Actually, I'm going to go back to the main system, which is here. So you can see that if you have a view of everything at the same time, you can have the luxury to increase prices, lose some certain amount of customers, and still being profitable and increase your profit margins. It's very, very important that you treat your company as an ecosystem, that everything is happening at the same time. So you individual actions will already start to report where you have the weak spots, so you can reinforce those weak spots and then complete this cycle of increasing prices, for example. Now, so this is counterintuitive. If you want predictability, you don't start with cost cutting. You start with decision rights. So where is the data and how repeatable price moves, and where is the cycle of this pricing? Which is the season, which products, where they are located, the customers, etc., etc. So it's a whole exercise that we can do about this, and for you to increase prices. And you will say, "Oh, this is difficult in my industry. It is very hard. It's very competitive." And I'm going to tell you now. No, it's not to tell you off. It's just to mention this to you. If that is the case, your product is a commodity. And I'm very, very sorry to say this. Your product is a commodity, can be interchangeable with anything else in the market. You are not premium. And you will say, well, that's the nature of my business. Is it? probably because you're focusing in your product and in a particular things. But there are ways, many ways, where you have things that you are very valuable. And I give you an example. A machine shop, they develop by their own a test machine or a test bank, a test bench. That's called a test bench about certain materials and certain resistance of materials and material memory, that is called. So where the things bend and come back to the same place, just a rough example. But it was a very, very interesting test bench. They had that for their own products, and they pride themselves of the quality of the products. They say, yeah, it's a commodity because it's a machine shop with metals. It's a commodity. So every machine shop around the country can do exactly the same thing. But nobody has that benchmark, that bench, test bench. So guess what we've done? When we discovered that, we produced that we licensed that, and we patented, by the way, it was a patent or trademark. And other machine shops were paying to test their own products. It was a complete passive income on something that they developed for themselves, and they had that in the corner there collecting dust, but not collecting cash. So there are many ways of things that you already have in your organization that can be perfectly is your intellectual property, can be trademark, can be patent, whatever is the case, and can be productized in a way that you can have a second revenue stream, a third revenue stream, a fourth revenue stream of the things that you already have there in your machine shop. And this is an example. There are many others. Anyway, so when you're working with me and my team, there's three outcomes that we are looking for. Outcomes, differentiators, and risk reduction. In terms of outcomes, a board-ready predictability pack. So the margin bridge, the runway model, the trigger points, and the 6 months capital allocation cadence that reduces surprises. And here's the key, cadence. So what happens when? And this is very, very important to know, because if you don't have this flow in the calendar, it's very hard to manage everything. Number two, how you differentiate, how we differentiate your business. Instead of hiring one all-purpose executive, we assemble an international advisory board around your missing capital, right? So, which is a pricing, which is a financial planning analysis discipline that you need to work, which is a working capital, which is an investor disclosures. So then rotate specialists every 6 months as the constraints changes. For example, in this model, if we look into revenues, once we bring the specialist of revenue and then we sort this out based on the whole advisory knowledge, which is a whole ecosystem, then why you need a chirurgical specialist in financing planning analysis for another 5 years when the job is done already in 6 months or in a year, right? So you reduce that headcount, you reduce that high charges and high specialist person at the time that you don't need it anymore. So you say, yeah, well, we have fractional CFOs, we have fractional financial analysts, etc., etc. Excellent. Guess what? They come with something that you think is what you need. But a board advisor, particularly international board advisors I put together, they have a full ecosystem view of what's happening. So perhaps the financial advisor or financial specialist today is not the right person. Probably is a person specialist in IP as a machine shop that I mentioned earlier. A person that goes around and say, oh, you have money on the table that you haven't took here, or you cannot take because it's not monetized or productized in a way that you can sell these products or services or to other companies, even including your peers. Number three, as a risk reduction, the approach is to be able to support UK going concerns and liquidity risk disclosures expectations. So your internal view and external narrative stay aligned. And I mentioned a lot, probably you noticed the UK, the narrative, the frameworks, the laws, the requirements, etc. But every country in the world have exactly the same things. So this is applicable. The methodology itself, the ecosystem of any organization is applicable if you are in one geography or one jurisdiction or the other, or you are navigating 3 or 4 jurisdictions. It's exactly the same mechanic. That's why we put together international advisory board, because many times we can bring companies that are local internationally. That's why we look into international advisory boards. Right. So one action you can take home today, and it's doable in 30 minutes or less. Pick one product line and write a one-page price waterfall showing where the margin leaks. And I can assure you these things happen. So let's pause here for today and reconvene tomorrow because, as you remember, yesterday I mentioned the ecosystem pool, which is the whole ecosystem. So where you have many ways to distribute your services and products through partnerships, alliances, distributors, marketing agreements, etc., etc. Today we spoke about predictability, how you make the things predictable in terms of the next 6 months, next year, 2 years, which is investors are looking for all the time. And tomorrow I'll show the controls view, so your board needs. So the control views that your board needs, if you don't have a board, non-executive boards or an advisory board yet, probably your executive team or yourself with your own ideas or things that are happening. So if you have these control views, so cash discipline is real and is not helpful, right? So let's wrap up this today. If you are a board member or a leader and you want a B team looking at your predictability plans, set up the 30-minute call so I can understand your position and how an independent international advisory board looking from the outside in your organization can help you and your team without stepping on your toes, without the traditional consulting overhead, and without the public theaters.